new traders struggle with in Forex and investing and swing trading or scalping, their greatest challenge is usually how to know the bias. And in this video, I'm going to outline very simple step that I use to know the overall market bias. Where is the market going? Now, I'm going to show you how I do this. And the first thing is to go to the highest time frame. The highest time frame tells me every single thing I need to know. And in this case, I'm going to use a different chart to show you what I mean. So if we go to this chart right here and look at the 12-month time frame, you can basically see that the 12-month time frame, which is the highest time frame, is already showing us a high and a low and a solid break of structure. And after that break of structure, what else do we see price do? Price came back down to an extreme discount to mitigate an inefficiency and also run a sell side liquidity. And if you use the Fibonacci from the low to the high, you can see our extreme discount, how nicely price came into ejected impulsively. Now, the moment I derive my 12-month bias being bullish, all I'll do is to go to the lower time frames and I'm looking for reasons to buy. I'm not interested in trying to sell this for any reason. I'm only interested in looking for a potential buy to continue higher. Does that make sense? Now, in this case, as you can see so far, we have a high, we'll have a low. So overall, we've not broken above the high. We didn't break above, below the low as well. So in my opinion, all I'm looking for is an opportunity to buy Aussie dollar. So while Aussie dollar is rejecting of this inefficiency written right here at the extreme premium zone, because if we use our Fibonacci from this high, this low right here to this high, you can basically see that price went into an extreme premium and also mitigated an inefficiency result at an extreme premium and then displaced to the downside. So a lot of traders are going to be looking at this and they're going to be looking for sells. In my opinion, I'm not looking for a sell on Aussie dollar. I'm consistently looking for an opportunity to buy Aussie dollar. And as you can see, this purple key level that I've outlined right here, that key level is a key level that I'm watching to be a potential support zone. So as you can see so far, I have my high right here and I have my low right here as well. And after that, I have my break of structure, significant break of structure above this high. So all I'm anticipating to see is for price to come down here for mitigation and potentially use this key level as support. And after that, the next thing I would like to see would be a potential expansion and for price to continue to the upside. And where's my target going to be? My overall target is going to be this low resistance liquidity because this is also my low hanging fruit area. So, and as you can see so far, look at this. So if you start to measure the impulses, you can see that from this low, we had this impulse to this high right here. And that's about 5.5% move to the upside. And after that, we had a retracement to the downside. And after that retracement, we had another impulse move to the upside, about 3.3% impulse move to the upside. So usually when I'm doing a quantitative analysis, I'm anticipating to see price to do at least 5.5 plus plus 50% of 5.5, which is around 2.75 or something. So if you add that up, that's probably around 8%. So all I'm anticipating to see on Aussie dollar potentially is for Aussie dollar to head towards an 8%. That would be my target on Aussie dollar. This is not something that is going to happen by the end of the week or in like few days. This is something that is going to take time. This is my overall target where I'm anticipating for Aussie dollar to go up to. But in the meantime, if I get into a trade, I'll be scaling out at realistic positions. And what do I mean by realistic positions? Number one realistic position I'm talking about is this low resistance liquidity. So if I do eventually see a buy from around this zone, I'll be taking profit at this highs or potentially closing the entire position and then watching to see what price is going to do afterwards, because overall I still want to see this high get taken. But if you look at that high that I just outlined right now, this high right here took liquidity from this previous high. But the thing is, the good thing with this run on liquidity is after it took this liquidity, it didn't break any significant structure below. So if price is coming back up, I want to see it rally above this high to run this buy side liquidity. Make sense? So that is my analysis, and this is one way to derive a bias. That way you just have one bias for the rest of the year. You don't have to wake up tomorrow and your bias is bearish, then next week your bias is bullish, and then you end up blowing your account. Rather than do that, why not just have one bias for the rest of the year, where you say, okay, the 12-month time frame is showing me that we're bullish, and all I'm looking for every single time is an opportunity to buy it. Whenever I see price coming to a discount, I'm looking for an opportunity to buy it. Whenever I see price mitigate any key level resting at the low, resting at the extreme discount zone, I'm looking for an opportunity to buy it to continue higher. Now, it doesn't mean that it's going to be 100 out of 100 and all trades are going to yield you profit. You're going to have losses, you're going to have wins, you're going to have break evens, but at the end of the day, this is going to be game changing. It's going to put you in a better place, and trading is going to make you to have better winning trades. And when trades win, they cover all your losses, and if you get another win, you're in profit, and in another win, you're in massive profit, because this kind of trades is always going to be delivering of at least a 1:5 to a 1:15 on average. Like, I've literally made a lot of videos and also shown our members how I'm able to capitalize on this kind of moves to catch trades that deliver 1:5, 1:7, 1:10, 1:15 as well. So that is my analysis on Aussie dollar. If you do have any questions, feel free to drop it in the chat. You can drop it in the comment section, and I will come there to reply you. And if you do need our support in trading, if you're struggling with anything in trading, whether it's entry model, bias, whatever it is you are struggling with in trading, feel free to send us a direct message today and we will help you. I promise you that. So I'll talk to you all in the next video. So you can help me do all the social media stuff, like, comment, and share with your family and friends that are interested in trading. I appreciate you, and I'll talk to you next time.